what do billionaire fathers like your father has we all respect him a lot, what billionaire fathers teach their son about finance? See, while growing up, other than Raamdeo Ji, Motilal Ji, I'm sure you must have had the privilege to meet Radhakishan Damani Ji, Ramesh Damani Ji, late Rakesh Jhunjhunwala Ji.
The Make in India focus led to a lot of opportunities on the electronics manufacturing side. I think in fact this correction provides a great opportunity for investors to buy into names that maybe they like but didn't have the courage to because of maybe loftier valuations. So I think one is the retail, the direct investments that they make, that and the SIPs that people are doing. I think both these together will become probably the most meaningful part of the investor cap table in India. So what that means is that capex, infrastructure, power sector, manufacturing, and some aspects of discretionary consumption should continue to sort of do well from a 3 to 5 year perspective.
Welcome to Walk the Talk with Sourabh Sisodiya. Today with me, I have someone who has a decade of experience in the stock market. He started his journey as an analyst to becoming the CIO of India's one of largest AMC. So today with me, I have Vaibhav Agarwal, who started his journey as an analyst and now is the CIO of Motilal Oswal Alternate Fund. Hi Vaibhav, thank you for taking out time today. Looking forward to have a lot of fun and insightful conversation with you today.
Saurabh, thank you so much for having me on your show.
Vaibhav, you come from a background, from a family which was involved in the stock market since many years. So while you were growing up, you must have heard a lot of stories about the market from your dad, from Motilal ji. So were you always inclined to come into the stock market? How did your journey start? Please tell us more about it.
So I think obviously growing up, obviously my father was a very passionate investor. So he used to tell me stories about companies and the markets. And then on the operating side, I got to learn a little more from Motilal ji later when I sort of joined, as an analyst in the group. But I think overall my journey formally started, I think I started investing in my own demat account. When I had a moderate salary, I think that gave me the understanding of what it takes to invest and from a prop standpoint. And I think when I joined the asset management team, that's when I learned how formal asset management for public market investors works. So I think a combination of having that ability to pick stocks and yet sort of an organized way for investors, I think that blend of experience was sort of useful.
Okay, but while growing up, did you always thought that okay, I will always come into the stock market, or you had other plans? Because as a kid, we have other plans while growing up, or you were always like, I will want to be in the stock market and make my career here only.
So I think, the stock market's always fascinated me, but I think at one point I was very fascinated with the US, that I wanted to sort of go and sort of be in America. But I think as I grew up and I spent more time in the US, I realized that I wanted to spend time in the capital markets. Or India was, where maybe the future growth would come from. And that's why I decided to sort of come back to India and then sort of join the capital markets industry.
Great, and you are absolutely doing great here. So Vaibhav, you had the privilege to learn from Raamdeo ji, your dad. You had the privilege to learn from Motilal ji. So over the years, do you recollect any instances, any stories that has stayed with you till now? That okay, and that was a life-changing moment for you and help you in your stock market journey. I'm sure there must be many lessons during this entire journey, but anything which still stays with you till now.
So I think with my father, I think able to learn, how to sort of research companies, how to evaluate them, focusing on the growth, focusing on the big picture, and I think that's kind of sort of seeing him doing it live. I think so. So there were many small things. I think it's difficult to sort of verbalize it, but I think it was that experience that helped me out. I think with Motilal ji, he's I think very very strong on execution, very strong on discipline. So sort of understanding how execution works, how discipline works, how planning works. So I think having a blend of both those experiences, I think definitely shaped me up as an individual.
That's great. And I've read that Motilal generally follows the QGLP framework for investing. So I want to know from your perspective, what is your investment strategy like? Because now we have seen that a lot of new technology businesses are picking up, which are valued in a different manner. So apart from the learnings that you have gathered over the years, is there anything specific that you have added to your strategy? Like how do you look for any stock?
So I think in terms of the strategy, I think we follow QGLP. I think one thing that I think I have done and maybe has been a more recent focus of our team is the focus on growth. So what we've seen is if you can grow for a long period of time, or if you can sort of figure out where are the companies where there's a growth asymmetry or the market is not pricing it in, oftentimes those can be interesting places to make money. And that fits well into our philosophy as well. Tech companies, I think some of them, I think they're evolving so fast that their addressable opportunities are sort of, obviously changing at a very rapid pace. So I think you have to see the growth and the valuations and context of that in some of those names. I think in terms of sorry, what was your next question?
Like anything that apart from the QGLP, and you applied any other learnings from your learning that okay, this is how I'll value tech businesses because
So one is, I think it's very important to see what is the market cap or what is the total addressable opportunity. Oftentimes, some of the traditional metrics don't capture some of that. So seeing what is the total opportunity and what is being priced in by the market right now. So I don't think that there's any standard metric to do it. I think it'll differ from each sector, each business, all of that. And I think that there are multiple ways to find companies. So one is that you could have companies which have not done well for a very long period of time, where maybe growth is coming back in a big way. Like we've seen some companies in the power sector and in the power equipment space sort of doing that. For a decade, they didn't do anything. In last 2-3 years, similar is the story with some PSUs as well. There could be some companies where there's a decadal growth opportunity in front of them. We see, for example, in capital market companies. I think post COVID, I think it's been completely game changing for not only broking houses but also asset management companies. And so the understanding of equity and the flows into equities are now real. you know FIs have sold over 1 lakh crores, and it's all been sort of absorbed by domestic money. So I mean, I'm just saying the size and scale has changed. So there are opportunities like that. Sometimes also maybe governments focus on specific sectors. For example, electronics imports into India was a big part of our deficit. The Make in India focus led to a lot of opportunities on the electronics manufacturing side. TVs, appliances, air conditioners, mobile phones. So a lot of opportunities there. So I think there are various ways in which you can identify businesses. Sometimes we also, when we do channel checks, we identify companies, from the channel. So multiple sources through which we sort of get to know opportunities.
that's a great insight. And like I'm a big fan of Motilal's wealth creation studies, how like stocks become multi-baggers, what are the logic behind stocks becoming multi-baggers. So as an individual, I would like to know like which was your first multi-bagger, because we always like to have multi-baggers in our portfolio, but actually holding that journey, because the stock doesn't go in a linear fashion. It goes from 100 to 200, again pull back, then it goes to 400. So, what was your first multi-bagger, and what was your learning? What like walk us through the entire journey of that stock, like how you identified it, how it like what was the journey of the stock, and what learnings did you get from that?
So for me, I think the first multi-bagger was this company called Group Finance, which is now merged into Bandhan Bank. So Group Finance was actually a subsidiary of HDFC Limited at one point, and they were in the affordable housing segment, and they were growing sort of pretty rapidly. And obviously, because of the HDFC management and the segment they were in, they were placed very well. I think the company was available at less than 1.8 or 2 times book. Eventually, it went to a point where it went at 8 or 9 times book. It got acquired at. So I think historically that's been one of the most richly valued NBFCs. So identifying that opportunity early on was obviously quite meaningful. And then there was a company called Laopala, which is they sort of manufacture crockery and cutlery and all of that. That happened to be so. Actually, a friend of mine had identified it. I think it was hardly 100 crores market cap at that point in time. And then it seemed like an interesting niche. Earnings were growing. They were putting up their facilities. So that again did well for me. So I think these were one or two companies early on, which were which were asymmetric in nature for me.
That's great. So we spoke about like catching about multi-baggers, but every investor makes some mistakes in the investment journey. Like sometimes you exit too early, or sometimes you are afraid to take a bet. So in your journey, is there a major mistake you made, or like which you think that okay, like this is a big learning from me, mistake in your investment journey that you think that okay, I should have done that?
I think one of the companies, we took the management's numbers at face value, and there were corporate governance issues, and that obviously sort of led to some capital erosion. And eventually, I think the only thing you can do at that point in time is just to sort of take a hard look at it, and move on. And that's what I did with that. So I think Yeah, so I think so there have been one or two mistakes like that that I've made. Again, I think if you have a portfolio approach, given that you're in the business of taking risk, there will be those opportunities which you miss out on. And I think this happened to be one of those where I think there was an error of judgment. And more than that, I think maybe not being attentive to some of the signals that were coming out.
Okay, that's great. And like they say that markets in the short term are sentiment driven, in the medium term they are liquidity driven, and in the long terms they are earnings driven. So if we look what's happening currently, like as you mentioned, FI has just sold around 1 lakh crore, and our markets have corrected. If you look at the broader market, there's a lot of selling. So what's your standpoint, like currently wherever we are placed? Do you think it's a sentiment driven fall or it's a liquidity driven fall? And earnings also, like Nifty companies are not as per the estimate. So what's your takeaway, like as a investor, as a retail investor, is it a good time to invest in the market? Because in last 2 years all rallies were bought into, like people who entered after COVID, there was a correction, market immediately hits new, like used to hit a new high. But this time the correction is slightly deep, and I just want to have your perspective because you talk to many fund managers, you yourself like get a lot of different insights. So what's your take on the current correction, and as a in retail investor, is it a good time to bet on the market or like?
So I would think that the current correction has been a little more liquidity driven. Obviously, India was not a very cheap market from a global standpoint. So that combined with just the fact that India's position in the emerging markets went from 22% to 19%. Plus China sort of has started coming back in a big way. Plus the US election also just went by. So I think both of these events led to some sort of pullout from the FIIs. Going forward, though, I think that the quantum of selling of FIIs will not be as much as what we've seen in the last, say, month or so. If you see, even on a daily basis, like there was a time when the run rate was 4-5,000 crores. It has now reduced to 3,000 and 2,000, etc. So I think so. If it even if it's at that level, I think the domestic liquidity should be able to sort of sustain it. From an earning standpoint, I think what happened is that the last 6 months were obviously elections and monsoon and all of that. So I think that led to some stagnancy in the economy. Going forward, though, I think second half onwards we should see some action. I do think that we are in a very positive GFCF cycle. So what that means is that capex, infrastructure, power sector, manufacturing, and some aspects of discretionary consumption should continue to sort of do well from a 3 to 5 year perspective. So I think in fact this correction provides a great opportunity for investors to buy into names that maybe they liked but didn't have the courage to because of maybe loftier valuations.
Right. So at current standpoint, like any sectors, or like you don't have to mention names, but any sectors you feel that okay are at. So like personally, if I see like a lot of banks have done well, posted great earnings. So do you think that at current scenario, what kind of trends are you looking at? What kind of sectors you think that in the years to come, like from a 1 year, 2 year perspective, could do well? Like any sector you think that okay, this could do well in the near future?
So I think there's a lot of investment happening in the power sector, both on the on the traditional power and the renewable energy. So the equipment manufacturers in those segments, I think they are likely to do very well because the order cycles may last for the next 5 to 7 years. So it's almost like a decadal opportunity there. So I would think there's clearly demand there. I would think again capital market companies, there is fear around regulation and all of that. But I think once that's behind us, I think these are again secular trends which are there in front of us. And I think the last, like you mentioned, banks, I think they've obviously, some of them are doing quite well, but obviously valuations because of investor pessimism is it has not been very benign.
Okay, great. And though FIs have sold a lot, but SIP data came, SIP data, like the monthly SIP inflows were at all-time high. So do you think that other than the like DIIs, retail, how big has retail become over the years? And what do you think like in the years to come, like retail SIP, because how much more of an impact it will have on the stock market? Because a lot of financialization is still yet to happen in India. So where do you see this going forward in the years to come?
I think I don't have an exact number as to how big the retail SIPs can become, but I think if you just take the trend, so I think one is the retail, the direct investments that they make, that and the SIPs that people are doing. I think both these together will become probably the most meaningful part of the investor captive in India. And at least in the near future, we have a big change in government, or people are very disillusioned about the economy. I think it's unlikely that this is going to stop, because I think for for many years, people have invested in fixed deposits and they've not been able to beat inflation. So I think there is a realization that you have to have some exposure to equity to generate wealth, and SIPs in various kinds of mutual funds, some set of investors in PMS and AIF products is sort of required.
I think Motilal itself has played a very vital part in this theme, like think equity, think Motilal also. Also that mindset, like if you look few years back, people were more like inclined towards fixed deposits, and now like last year I was reading an article that banks are saying that we don't have save like deposits because people are investing in the stock market. So Motilal itself has played a very big part of this. Now coming back to like one question which is in my mind is that what do billionaire fathers like your father like has like we all respect him a lot, like what billionaire fathers teach their son about finance, like any specific learning that okay this is what you need to do, because at your level the game is different. So any specific learning that you would like to share with me or for the audience?
So, see, I think in my father's case, since he was a first generation entrepreneur, I think his worldview is a little different from maybe from a few other people. So I think one is the focus on thriftiness, which I think just because in the beginning survival was obviously a very big part of their thinking. So I think that survival mindset, that focus on operating cash flow, even now I think that focus on that and sort of not doing anything where you lose money upfront. So I think that's one thing. The other thing is to sort of think big, because I think when you think big, then you will sort of hire those kind of people. You will meet those kind of people. You'll address those kind of opportunities. So identifying those kind of opportunities where you don't have to invest too much capital upfront, things can be quite big. So I think those are, and also because of him maybe being a chartered accountant, etc., some of that mindset sort of comes naturally to him. So yeah, I think that's some of the stuff that I've.
That's great. And you mentioned about thinking big, and you yourself from an analyst now you have become the CIO of Motilal Oswal Alternate Fund, so congratulations for that. And I want to know that what are your vision with this, that okay where do you want to like what plans do you have for this AMC, for the alternate fund, what are your goals?
My first goal is, there are a lot of people who've entrusted us with their money. So is to ensure that we are able to continuing to deliver sort of consistent outcomes for them over a period of time, and to not disappoint them. So that's obviously the first most important goal. The other is, I think, to sort of get a broader set of investors to invest with along with us, because I think what at least I think my personal belief is, I think we're doing great work here, and obviously like a lot more people to participate with us and sort of ride the equity wave. And so I think these two are my focus areas, to sort of find the companies and sectors and the risk management to sort of make money consistently, to sort of also maybe partner along with people and clients who can sort of partner with us and ride this wave.
Okay, so as a fund manager or as a CIO now, what's your typical day look like how do you start your day? So just run us through like from morning till evening, what's your typical day look like?
So I think that's the interesting thing. Even I sort of think about it, but I think almost every day is different. Maybe I think what we do is sort of you come into the office, then you sort of see updates around portfolio companies, see maybe what are the other what's happening in different sectors. Then we also have our morning investment meetings where across the analyst team and fund managers we discuss any updates or anything that's new. Then we have management meetings, maybe 2 or 3 management meetings in the day, and then sometimes we speak to analysts. Sometimes maybe there is some channel checks that we're doing, and then also obviously evaluating where the funds are, how they're doing. So that's typically so that's more on the investing side. Sometimes also the distribution side, we have to speak to our partners or clients. So sometimes some part of the day also goes in doing that.
It's great. So you mentioned iShare page, and if you can just walk me through in just 1 minute that as a normal retailer, any specific things that he should look like if he wants to identify the next multi-bagger very quickly, because I know it's like not that easy. It's easier said than done, but a general checklist, like suppose someone wants to like how the fund identify iShare page, any normal checklist or normal person who can try to incorporate this.
So I think now to find multi-baggers is a little tougher than maybe what it was 15-20 years ago, just because of the number of participants and the kind of information flow. But in general, if you see, there are 3-4 tenets of it. One is that you have to identify companies and sectors which will have a long runway for growth, which maybe is not currently understood by everybody. So you definitely have to be ahead in terms of your understanding of that sector, of that company. if you add up the profits for the next 3 to 5 years, that should be the current market cap. I think that is when you really find the degree of asymmetry that would compose a multi-bagger. So yeah, I mean, I think that's how at least. So I think it's easier to find companies which can become 2 3x. The ones that become, I think, almost nobody identifies 10 15 baggers from day one. Like it's like they know it's a doubler or a tripler, and then iterative it grows on from there. But so yeah, I think that's how I think usually the journey for any multi-bagger is.
Okay, and Vaibhav, like you come from a tech background, like you have like studied computer science. So, and lot is happening on the AI side, ML side. So, do you think in the years to come, what will be the role of at least AI in finance side, or at least in the AMC side? And currently, are you using any of these techniques to basically improve your research or like for your investment process?
So I think AI going forward, what will happen is a lot of maybe some of the insights that you want through data, through management commentary. I think some of that work AI can do very quickly for you. I mean, I think for it to start getting to a level where it becomes a complete portfolio manager in itself is, I think, yet some time away, but can definitely help you in. So I think it'll be a man and machine kind of a combination rather than man versus machine. In terms of us using it, so actually we have a team which is dedicated to quant investing, which focuses specifically on quant techniques and also using AI and ML generate their returns. So I think we sometimes take their help to get more insights about our portfolio and the companies we've invested in.
Okay. And that's great. So know that while growing up, like you interacted with Raamdeo Ji, Motilal Ji. So any specific thing like before you ventured in the stock market, did Raamdeo Ji tell you one thing that okay, if you're starting in the stock market, because I have watched a lot of videos of Raamdeo Ji, like how like his wealth grew, he lost everything, and he again started from scratch. So, any specific story, if you recollect that, okay, this is something which my father told me and it has stayed with me till now? Any specific incident, if there's any?
I mean, I think obviously, I heard stories from him about Hero Motocorp and Bharti Airtel, and I think Hero Motocorp was a situation where, for example, he could see the growth of sort of two wheelers in India, and because of their partnership with Honda, I think they had an advantage. The more interesting case was Bharti Airtel because that was, I think, at that point, I think very few people understood the earnings potential of Bharti.
Agreed. And I was watching in one of his interviews, Motilal team told him, Sir, ji, आप गलती कर रहे हैं, मत डालिए पैसा. And then he's like, I exited and I again entered, and then it like gave me immense wealth.
Yeah, so I think that was one area where I think he had built an earnings model which, or some earnings in his mind, which was significantly higher than what other people were estimating. So I think again it sort of boils down to that where, like, in some cases you get some insight or some, I mean, even if you're, say, not significantly ahead but even moderately ahead, you can sort of generate meaningful returns.
That's great. And see, while growing up, other than Ramdev ji, Motilal ji, I'm sure you must have had the privilege to meet Radhakishan Damani ji, Ramesh Damani ji, late Rakesh Jhunjhunwala ji. So, is there any specific learning from any of them, or because as we grew up, we heard these names and like that inspired us to come into the stock market. So, anything specific like in a casual conversation you must have had with them?
Yeah. So I think there are two things which are common to all of them. One is I think a lot of them just do very simple back of the envelope calculation and they see what is the market cap with respect to the entire opportunity. So if that is multiple times that, then I think that's when they get interested. The other thing is that I think being value investors, I think a lot of times they're focused on some of them want when valuations are really depressed. So something may have crashed or it's not done anything for a very long time. No one's looking at it. So I think these are two areas I think where I think a lot of them have made big money.
Okay. And one question which is in my mind is like, do you ever feel the pressure of carrying this legacy forward? Because, like, do you ever think about it, or like, does it bother you? Like, is there a pressure, or like you are just enjoying?
I think see, it's easy to sort of psych yourself out, if you start thinking that this one, I mean, like, obviously my father did very well and he set up an institution and everything, but I think if you remain focused on what you're doing, and if you have some understanding of it, I think over time you remain focused, you put your head down and you do your work, I think you honestly don't have time to think about these things. So that's where I focus, and I think that's helped me so far.
That's great, and like your journey itself has been tremendous. Like since like you started with Crisil, then as an analyst at Motilal, and now the CIO. One thing that like while like I when I pass the road, I see that when the markets are up, the building color is green. When they are red, it's like when the markets are down, the building color is red. So, any other specific office culture that you have in Motilal that has helped build such a quality?
So I think even as as promoters or even as the company, we've always invested in mutual funds, our own mutual funds. So we are one of the largest investors in our own mutual funds, and so to that extent, I think for a lot of employees, some part of their contribution goes towards the company's mutual funds. So that is again to enhance the culture of equity investing and helping people build money through.
That's great. So, thank you, Weber, for answering all these questions. Now, we'll do a quick rapid fire. So, there'll be you have to answer them. Ramdev ji as a father or as a boss, who's more strict?
The boss,
More strict. Your first investment amount.
1 lakh,
Okay, and your first salary, like as an analyst or wherever your first internship may be.
5 lakhs.
Uh, one sector you think has a lot of potential.
I think capital markets.
Okay. Uh, your favorite stock market movie.
I think getting the name, the one that 1987 was the Wolf of Wall Street. Getting the name, sorry.
Okay.
But I think favorite movie is The Prestige.
Okay. So
yeah.
I also like Prestige a lot. Best book for a investor if he wants to start his investment journey.
I think One Up on Wall Street is
By
good
Peter Lynch.
by Peter Lynch. Yeah.
One piece of advice for any retail investor.
I think understand what you're buying, do some research, and then buy into it.
Okay. Last question. Any role model other than Ramdev ji you have in the stock market? Okay, that person has inspired you a lot.
So I think there are two people. I think in the US it was probably Warren Buffett. I mean, obviously I heard a lot about him growing through childhood, but I think he's actually built a business empire, and what he was able to do is, so obviously people know him as an investment genius, but what is as important and more important is the insurance float he got at 2%. So I think getting that permanent flow of capital, right? One is to have stock value as investment, but to get that sort of cash flow. So I think, and how he's built his entire empire in Berkshire Hathaway. So that was one, and I think, and then probably I think Mr. Junjunwala, I think he was obviously a maverick investor, and he was able to identify businesses early on, and he had the courage to take those big bets. So I think these are two people in the stock market who sort of have inspired me.
Okay, thank you, Weber, for your time and like your clarity of thoughts is quite good. Like you know what to like what your focus is. Your answers were very crisp and like I found them very insightful. Thank you for your time. Wishing you and Motilal AMC and everyone in Motilal. You hope that you make sure that the equity culture in India keeps growing.
Thank you so much.